Median-based budgeting with a unified tax offset. Addressing concerns of citizens bankrupting the nation through the citizens' veto. One of the first concerns that smart people have about anything like a citizen's veto is that people veto all the taxes and vote up all the expenses, essentially bankrupting the government. This is a very valid concern, however, it is an obstacle that can be overcome. Governments around the world have already shown they act as they might accuse citizens of acting if they could budget. As you can see here, according to the United States government's most recent fiscal report, the country is projected to be well on the way to bankruptcy as its public debt is projected to balloon to over 300% of GDP before 2060. Governments are literally printing digital money to fund massive budget deficits, particularly in the age of COVID-19 corporate welfare bailouts. We actually need to put in a system that protects the national finances against both the citizens' veto and the legislature itself. Indeed, the budgeting procedure in many nations is a complete mess. This is probably a topic for another video in discussion of some other proposals, such as total budget transparency and directly electing cabinet officials, so departments of the government are held more responsible for the public's funds. How many times have you seen the government shut down in the United States due to squabbles over a budget? This simply should not happen, and if instead of an up and down vote on a budget, legislative chambers used a median-based budgeting approach, there would be a lot less gridlock and probably a lot less pork barrel spending on the pet projects of powerful legislators. And some of these programs are completely absurd. For example, the US spent $20,000 in US taxpayer money to fund drag queen shows in Ecuador. You literally cannot make this stuff up. Why is US taxpayer money going to Ecuador, and what public interest do we have promoting drag queens? I am sure the people of Ecuador are just as puzzled over this one. And these are exactly the types of wasteful programs a citizen's veto is necessary to stop. What is median-based budgeting? The idea is that instead of voting yeah or nay on the budget as a whole, legislators and citizens vote on every single line item with a number. There can be a series of recommended numbers from the executive branch and the policy wonks in the legislative branch that appear on the ballot. People using data from the fiscal disclosures generated from Proposal 8 can also issue their own recommendations looking at what fat can be trimmed from the budget. But ultimately, the final say goes to the voter, line item by line item. After the vote, the median value is the one assigned to that line item. The median item is basically the exact middle value, or the average of the two values closest to being middle for even numbers of votes. For example, if people vote $1 million, $3 million, $4 million, $10 million, $20 million in the program, then $4 million will be the final value since it is in the middle. You use the median, so legislators cannot manipulate the number, putting ridiculous extreme values like $100 trillion to manipulate a simple average, or mean, calculation. If every 199 senators in the US Senate voted for $0 on a program and one senator voted for $100 trillion on a program, the mean would give you a $1 trillion budget. A median would give you 0, which better reflects the will of the Senate. The other characteristic of this system is that if over 50% of people want the program to be 0, it is completely defunded. Thus, it would be the equivalent if they had a straight-up vote on the program itself. This is the way it should be. In a chamber requiring supermajorities like the US Senate, you could even use a 60% standard so that you select the value representing the voter 60% from the higher number instead of the 50% number with median. So, there are many ways of implementing this. And zeroing out a budget item has been a tactic that has been used in budgeting before to get rid of programs the majority does not like if they do not have the numbers to break a filibuster to repeal the bill itself. We should have no problem with this, since it should be easier to repeal laws and defund existing programs than to pass new legislation. For example, it would be prudent to get rid of a 60% cloture threshold in the US Senate for all straight repeals of legislation and have it only applied to new legislation. Mistakes need to be dealt with swiftly, while new legislation should only be enacted if there is a broad consensus it is a good idea. That is also one of the reasons we are proposing sunset clauses, so by default bills are nullified if not reapproved. In a multiple legislative body system, you should include median-based budgeting through each government body that passes legislation, the lower chamber, the upper chamber, the citizens' legislature, and finally the broad citizens' vote. When you do this, the final number would be the lowest number approved by any of these legislative bodies. This is based on the principle that if one legislative body disagrees with legislation, they normally have the right to kill it. The bias should be towards more measured spending anyway. If special interests want to give away tons of money to corporations, the people can cut that back a lot. On the other hand, if the people want tons of free money, the legislators can rein that in. This system serves as a necessary restraining influence on the growth of government, without the chance of gridlock, since there is no all-or-nothing votes on the budget to invite brinksmanship by either side of the political aisle. This is one way you prevent both citizen and legislator overspending in the budgeting process. Adding the unified tax offset. This is the crucial element you have to actually put in real restraints. It will also allay fears of a citizen's veto getting out of control. Ultimately, any legislation approved by the legislature and the people will have to be budgeted. The people could vote to give everyone a $30,000 bonus without a corresponding increase in taxes. But if no money is allocated in the budget for that program, that legislation will effectively be null and void. The way this is done is to legislatively specify a certain type of tax or a combination of certain types of taxes as a unified tax. It is unified in that it applies to all budget items under normal circumstances, and the rate of each tax in the basket is uniquely determined by the amount of money you need to raise. Then the government conservatively estimates that each $1 million requires a certain percentage of this tax to offset the spending. Then you make it clear that for every $1 million they approve on any budget line item, the taxes on the public will be raised by that amount. If you include multiple taxes as part of the unified tax, a given percentage is allocated to each tax. For example, 70%, or $700,000 could be allocated to sales taxes, and 30%, or $300,000, could be allocated to property taxes. If the total assessed value of property for a country was $30 trillion, then that $300,000 would represent $300,000 divided by $30 trillion, or 0.000001% for each $1 million allocated in the budget. If the total expected consumer spending for that same country was $15 trillion, then that $700,000 would represent $700,000 divided by $15 trillion would give you a 0.00000467% increase in sales tax. For each line item in the budget, that should be specifically stated by the software one is voting through, so each person knows how much will come out of his or her pocket if that plan is approved. In this example, a household who puts in an expected consumer spending for the year of $20,000 and assessed home value of $300,000 into the software would see for a bill costing $1 million, they would expect $0.0039 in increased taxes. Given the large numbers involved in this country, the rates should probably be quoted in billions, i.e. 10.0 billions for the property tax and 46.7 billions for the sales tax per $1 million allocated. Of course, election software could allow voters to display it however they would like, including apply to their own unique household if they plug in their budget and asset data into the software. This makes it more real for each family. It is necessary that any and all taxes included a unified tax be one that everyone reasonably pays, directly or indirectly, or this does not work. This provision as to what can be included as part of the unified tax should be added as a constitutional amendment so politicians do not put in taxes that only few people pay, so people have no incentive to cancel their pork barrel spending projects. For example, you cannot use a car tag license fee. Not everyone drives cars. Those that do not drive cars then have every incentive in the world to vote up every item on the budget. They have no skin in the game. Corporate taxes, excise taxes on certain items, and income taxes, which a lot of people do not pay, particularly if they are retired or not working, are thus all forms of revenue not appropriate for a unified tax. Sales and VAT taxes work because practically everyone pays them directly or indirectly. Poll taxes would work because everyone voting is paying the tax. Property taxes can be unified because all but the homeless pay them directly or indirectly. If property taxes go up, the rents should go up with the taxes, although the homeowner will share some of that burden depending the demand for rental units. Note that the total tax burden does not necessarily need to be the same on each person. You could theoretically charge a greater rate on one class that is wealthier than the poorer, as in the property tax example. Homeowners will pay more than renters. For those with large real estate holdings, who are even richer, increases in housing millage will affect them even more. The main thing is every voter needs to have some share in the burden, so there is an incentive to vote down what they consider wasteful spending. If the average citizen is not willing to pay even a small amount of their own money on a program, then it should be rejected. Tax is not included in the unified tax. So, what do you do with all these other taxes like the income tax, corporate taxes, etc. that do not fit in this box but generate a lot of revenue? One thing you can do is provide a partial coverage of spending for each line item, depending on all the revenues coming in from these taxes. For example, let's say that you have enough money from such sources you can knock 70% off each line item across the board, if spread evenly at the highest end estimate of spending from the budget offices. Then you can reduce the percentage per million by 70%. So basically, people are covering 30% of the cost of each bill on the unified tax. Instead of a $10.00 billion increase on property tax for each $1 million, it would be 10.00 times 0.30 or 3.0 billions. Instead of a $46.7 billion increase on sales tax for each million, it would be a 14.0 increase in billions. But the percentage people cover needs to be above 0% to conform to the skin in the game feature necessary to make this tax work. The bite from each program will be less, but there will still be the incentive to cut it if they really do not value the program that much. And given that you are calculating the 70% based on the high-end estimate, the chances are that you might end up having a budget surplus for the year after the people or the legislature take a hatchet to all the pork barrel spending. If we use this method, that is exactly what should happen given such scrutiny to each line item is not really given right now. An example of how this works. For example, let's say that you have a big government contract to send $100 million to aid Ukraine. That is the budget estimated by the State Department, which is larger than CBO's proposed $80 billion. Let's assume the people chose a median of the $100 billion estimated by the State Department. 70% of $100 million is covered by non-unified taxes, so that is $70 billion. The people would need to fund it by $30 billion, 30% times $100 billion. Let's say billion rates on the unified property tax goes up by 10.0, and sales taxes go up by 46.7 for every $1 million spent overall as we outlined earlier. If the people fund the full $100 million, their taxes go up 300,000 billions, 10.00 times 30,000, on property and 1,400,000 billions, 46.7 times 30,000, on sales taxes. This translates to an additional 0.03% tax on property and an additional 0.14% levy on sales taxes. If the people agree with the CBO instead and the median chosen is $80 billion, then taxes need to go up $24 million, 30% 80 billion equals $24 billion. Taxes go up this time 240,000 billions, 10.0 times 24,000, on property and 1,120,000 billions, 46.7 times 24,000, on sales. This translates to a 0.024% rate on property and a 0.112% rate on sales. Now you have an expected surplus of $14 million from non-unified revenues due to the cuts from $100 million to $80 million. 70% of that, or $14 billion, the government planned to spend on this initiative when they sent the bill to the people. Now the money will no longer be spent and can be used to pay down debt. In another scenario, the people might ask, why are we sending our tax dollars to Ukraine? Why aren't we spending that money on our own roads and schools? Did the president's son get paid millions of dollars by interests in that country or something? No, we the people want zero. Then there is no increase in taxes and a resulting $70 billion budget surplus from non-unified taxes no longer going to the Ukraine. Exceptions for excise taxes. Additionally, you can take off some additional percentages for programs funded with excise taxes. For example, to the extent the gas tax goes directly to roads, it can be applied directly to roads over and above the unified tax. For programs like this that might even be fully funded by direct user fees, that is one of the few cases we might advocate for not directly applying a unified tax. Ideally that is what you want, programs fully funded by the people who use the programs the most, without those who do not benefit paying anything. That extent which is not fully funded gets subjected to the normal budgetary test like the hypothetical money to the Ukraine. In these cases, you can even replace the unified tax with a rate charged on the excise. This way people who drive cars can assess whether the extra spending on roads is worth an increase in a license plate fee or gas tax. If you put in place more complicated voter registration procedures, you could even arrange it so only the people who pay a certain excise tax vote on the amount if they are the only ones benefiting from the spending, although there are several circumstances that could put the wisdom of such a decision into doubt. The flexibility does exist to implement something like that to better align the incentives for everyone involved. It is also important that cash flow received through the issuance of debt is not included as an offset to the unified tax increases as the money from the non-unified taxes are. That is how countries go bankrupt. There should be a constitutional amendment to make sure this does not happen. Setting the unified tax. This is another example where the median-based voting comes into play. But you have to do things a little different to make sure the percentages all add up. The legislature votes on what taxes to include on the unified list along with their selections and sends that to voters. It can start with the lower house setting forth the taxes and a number between 0 and 100 for each. The total has to add to 100. For the lower house, a score of 10 would basically represent 10%. This goes to the upper house of the legislature and they can suggest other taxes and send it back to the lower house. The lower house can accept or not accept those suggestions and will send their final distribution to the upper house. The upper house then will vote on each item with their own score between 0 and 100. Obviously, if they do not like a given tax, they can zero it out. Each legislator's vote points should total 100 both in the upper and lower house. The total for each body shall consist of taking the median for each individual tax and then normalizing the relative distributions so the total is 100. For example, in the House the medians might be, tax A is 30, tax B is 20, and tax C is 10. The total of these items is 60. We need to get it to 100. So we multiply each by 100 divided by 60 to get normalized values of tax A is 50.00, tax B is 33.33, and tax C is 16.67. Now let's say the upper house votes as follows: tax A is 15, tax B is 25, and tax C is 40. The total is 80. We again need to normalize it to 100. So, we multiply each item by 100 divided by 80 to get the following: tax A is 18.75, tax B is 31.25, and tax C is 50.00. The citizens' legislature and the citizens as a whole will give their numbers. Let's say the citizens' legislature comes up with numbers that are normalized to 100, tax A is 50, tax B is 20, and tax C is 30. Then the citizens as a whole voting electronically come up with number normalized to 100, tax A is 34, tax B is 22, and tax C is 44. Now we take the lowest of each item as we would on a budget, so anybody can effectively veto one of these taxes under normal circumstances. That gives us, tax A is 18.75, tax B is 20.00, and tax C is 16.67. The total is 55.42, so we normalize this by multiplying by 100 divided by 55.42 to give a final total of, tax A is 33.83, tax B is 36.09, and tax C is 30.08. So, the final percentage distributions are 33.83% to tax A, 36.09% to tax B, and 30.08% for tax C. Now it is possible that every tax is effectively vetoed by at least one body. In that case, the citizens' line item veto vote will essentially control what taxes remain from the lower house's initial tally on the principle the citizens get the final say. So, if the citizens only put a 0 on tax B, then you would throw out tax B and then remove all 0 vote values from the upper house and citizens' legislature and recalculate the numbers. Alternatively, you could just leave the citizens' vote as the controlling numbers regardless of what happens in the other bodies. Then it is essentially the lower house qualifying what gets on the ballot and the citizens assigning the final numbers. This certainly would simplify things. The potential argument against that is if the Senate consisted of members appointed by the states themselves needed an effective veto against some tax that would severely cripple the state governments. For example, it could be a direct tax on the states themselves that the lower house proposed. The other question you might ask is why include the citizens' legislature at all in this process? Again, it is a matter of preventing really bad taxes getting through. It is conceivable the unified list could include a huge list of taxes that not everyone in the general population examines. There might be something about one of these taxes that benefit lobbyists and that might lead to really negative effects in the economy that only those looking closely at it notice. Remember, that is precisely why we do not just send everything to the citizens' final vote without going through this step first. We are not trying to just implement a direct democracy. We want the republic so there are checks and balances in place to prevent bad law from being enacted. What is unique about this situation is we need at least one tax added onto the list, so we have to make accommodation only for the rare situation where every tax is vetoed. We have to thus make an arbitrary decision on the tiebreaker, and the citizens themselves arguably makes the most sense. Also, towards that end of instituting Republican checks on this process, every tax on the list should also be subject to the legal challenge outlined in Proposal 5 of our agenda. For example, the United States Constitution has very strict limits on what types of taxes can be levied by the general government. That is the reason the 16th Amendment was adopted. So issues of constitutionality should be examined with any tax. One other thing that can be contemplated is to have the citizens' legislature just vote to zero out items rather than assigning a number. If the majority of people zero it out, then it is cut, otherwise, the numbers assigned from the legislature go into effect. Most people will likely either use the recommended numbers or assign a zero if they do not find the program valuable, so such a simplification will likely not make much of a difference in the vast majority of cases. However, in the interest of full empowerment, giving the citizens an option in assigning these numbers makes a lot of sense. If public advocacy groups find huge amounts of waste in certain departments from the data provided by proposal number 8, this provides the people with a way to immediately get rid of that waste before they can elect someone else to fill the position of the executive wasting the money. They can lower the budget, without having to just eliminate the entire program or department. If people overspend, you will get a deficit. However, if using this system, the chances are that you will set surpluses instead, as people are more likely to make difficult decisions if their own bank account is at stake. With those surpluses, debts can be paid off, rainy day funds can be accumulated, or legislators could propose an income tax cut the next year funded by the surplus. Similarly, if people vote to raise taxes that are not in the unified bucket, the tax increases on the unified bucket go down. If they vote to lower the taxes not in the unified bucket, then they will pay higher on the taxes in the unified bucket. This is how you enforce fiscal discipline on both the legislators and citizens. Regardless of what bills are passed, people will have to reconcile the costs in the budget. If they get rid of the income tax and every other tax, then the amount they pay on the other taxes is going to go up through a greater unified tax burden. There are no free lunches. People will have to make the same hard decisions with the government's checkbook that they make with their own every month. This is how you restore fiscal accountability to the government while increasing voter empowerment. There is a lot more that needs to be said about the budget process overall. This is a simple introduction to this idea of introducing fiscal accountability into the budget process. The main point is that there are ways of implementing a citizen's veto that actually increase the chances of fiscal responsibility, in contrast to the fears of citizens blowing up the budget.